Twitter no longer exists, at least as a standalone company here, technically speaking. The Elon Musk-owned social network is merging with a new shell company called X Corp. That's according to a California court document from a lawsuit filed against the company and its former CEO Jack Dorsey by conservative activist Laura Loomer. Now, Musk first hinted at what he called X, the Everything app, last fall, before his purchase of Twitter was finalized, likening the idea to something resembling the Chinese app WeChat, which is used in a number of capacities, including messaging, payments, and booking tickets. The move has sparked considerable speculation online about what is next for the platform, and though Tesla CEO has been pretty vague about specifics, he did tweet out X very early this morning, which has since garnered nearly 30 million views. Well, speaking of Elon Musk, let's talk about Tesla. Shares moving to the upside today, up just about 2% with about 40 minutes to go until the closing bell. The EV giant announcing this week that it's building a mega-pack battery factory in Shanghai, China. But what does this all mean for Tesla's broader expansion plans? Joining me now, Dan Ives is here in studio, Wedbush Managing Director and Senior Equity Analyst. We've also got our autos reporter, Pras Subramanian, here at the desk with us. Dan, what do you just give us a sense of how significant this is and why specifically Shanghai, do you think?
Well, I mean, the hearts and lungs of Tesla are in China. And regardless of all the talk out there, I mean, they're doubling down on China in terms of this battery factory. And you look at what they've done in terms of just manufacturing. I mean, China, not just from a supply, but demand perspective, that continues to be one of the key ingredients for success. I think that was almost a flex the muscles moment in terms of what you saw here.
So I think it makes sense for them to build these battery packs in China where the materials are, the expertise is. You can build them cheaply. Do you think Tesla can kind of shake off the governmental sort of overreach there? Can they kind of, have them ignore that and still kind of perform there? Or is it going to be a overhang for the company as Washington kind of gears up against China?
Sure, it's great. I mean, with Big Brother watching in Beijing, I mean, look, that's the tightrope that both Musk as well as Cook walk in terms of what we've seen. I mean, that's where production for iPhone as well as a lot of the Model 3 and Model Ys are. Look, I think ultimately, they'll start to build out in the U.S., but I think this is a signal, and I expect Musk to also be spending some more time in China. That's one of their core advantages in terms of what you see with the Gigafactory there. And you look at batteries, I mean, that is really going to be the sort of the golden goose in terms of going forward.
Yeah, Dan, you mentioned maybe we could see more plants, more factories here within the U.S. Musk has a goal of 20 million vehicles to be produced by the year 2030. If that goal is going to be achieved, how many plants do you think could potentially be necessary?
Look, I think it's first thing first, right? Making sure they don't trip over their shoelace. I mean, especially right now, they're cutting prices. Demand's been strong, but I mean, that's a balance, especially with the price war in China. But you see in terms of in terms of Mexico, I think Indonesia is next. You're going to continue to see more and more factories out there, but that's going to require CapEx. And I think it's also important right now that if you look at what's happening in Europe, you look at Austin, I think those are the keys in terms of Berlin as well as Austin, ramping those. And of course, in longer term, there's going to be a lot more things behind that.
Do you think Canada is the most likely destination, given the IRA sort of influence there?
I think it checks every box. And I think when you look at Canada, you look at Indonesia, those are the ones that make the most sense. And then, of course, they'll continue to expand. I think for right now, I think you take a step back, it is really the scale and scope. I mean, you look at a lot of the other, whether it's Lucid, whether it's some of the 313 area code, GM, Ford, a lot easier said than done. I think right now, that's why they're trying to put an iron fence around their backyard.
What about Mexico, the new plant that they announced there that is located there? How critical is that just in terms of Tesla diversifying its supply chain and really getting ahead of any potential types of issues?
Well, also it's about a sub $30,000 car. I mean, you're not getting a sub $30K car if that's being built in Europe or Austin. And I think it's sort of carrot and the stick. That's what everyone's waiting for here. But because to get to, as you talk about, some of the longer term goals, you need to be mass market, you need to be sub 30,000. But then I think the big debate going into next week is margins. Like, what do margins look like? We believe at least this quarter they'll be able to sort of toe the line in the sand. But if you continue to get significant price cuts, look, that's the work. Look, I think we're going to get more price cuts. I think they're containable. But I think, especially in China, that's really right now the biggest variable. They've been able to navigate, I think, extremely well. That's why the stock's done what it's done. But I think that continues to really be navigating this next step is what investors are focused on.
So do you think these sort of 5 price cuts this year alone, is that really indicative of a demand problem? Or is it more about them sort of going after competition like GM and Ford and just sort of growing the market share?
Look, I think it's a softer macro, and I think we saw that last year. So you got to just read the room, rip the Band-Aid off, and that's what they've done. So I think the first step has been what I view as just a massive poker move that's paid off. But it's competition. Whether it's 313 area code, whether it's Europe, you got Lucid, you got everyone coming. They can't just sit there high in their chair and not cutting prices. And I think that's essentially what's happening now. But because of the margins, they have that flexibility. Look, the haters are going to continue to hate on Tesla no matter what they do. So far this year, it's been a massive bet. Next week's important just in terms of that margin story. That's really going to be the front and center.
Dan, how worried should Tesla be about competitors? Obviously, it probably has something to do with the price cuts, but just given the number of EV models, new EV models that have either been brought to market already or with plans to come to market, a number were on display at the New York Auto Show this year. How big of a threat do you see some of those models being specifically to Tesla?
Yeah, I mean, it's still Tesla's world, everyone else paying rent in terms of EV landscape. But in terms of everything Mary and the team are doing at GM, I think that's probably the one that could have the biggest ripple effect. That's competitively speaking, but you got lower priced cars. You look at what's happening on the Cadillac. You got a lot of the models coming out, over the coming years. I think that's the broader thing, is that you have what I'll call an EV arms race going on, but I do not view it as a zero-sum game. I mean, I view this as it's a green tidal wave, the biggest transformation to the auto industry since 1950s. But at the top of that mountain is Musk and Tesla, and everyone's trying to play catch up.
So far, really, Tesla's the only kind of EV maker at scale, right, across the globe. We talked about GM and Ford earlier today in the green room. They're coming on strong, new competition. Are there any sort of potential hiccups for them trying to get to scale? I feel like that is a very difficult thing for any automaker, let alone legacy, to get to that EV scale.
Well, and also it's easier when Tesla's doing it under a different magnascope and microphone, because you look what's happened with GM, maniacal focus by the street in terms of margins, but yet Tesla was held to a different standard because of credit. So I do believe it's an apples to oranges comparison. I think GM, I think what Farley and Ford are doing are, I think, great steps, but easier said than done in terms of that scale, production, battery. But I do believe we sit here 2-3 years from now, I think GM could be a double, in my opinion, as they get ultimately find success converting to that massive EV base. And that, along with Tesla and some of the pure plays like Lucid, you look at NIO, XPeng, and some others in China, there's not just one way to play it. Tesla continues to be our favorite play.
Certainly expecting massive growth there across the industry over the next several years. Dan Ives, always great to have you here in studio. And of course, our thanks to Pras as well.